To talk about numbers, Mr. Lalit Gupta, Managing Director and CEO of Essar Oil, joins us. Mr. Gupta, good morning. Thank you for joining us. Two basic numbers from you, Mr. Gupta. Your current utilization rate or utilization rate for the quarter gone by, along with your GRMs.
Yeah, we have declared first half and second quarter results, and just on the numbers, first on half yearly basis, the turnover is almost 52,000 crores, which is up from 45,000 crores in the corresponding quarter. Throughput is up 10.32 million tons, which reflects almost 103% of capacity. Our EBITDA is up to 1,447 crores from 869 crores. The GRM is also up from 6.97 to from $6.41 a barrel. This is on half yearly numbers. Now, as far as the second quarter numbers are concerned, the turnover is 27,000 crores against 23,000 crores. The EBITDA is 1,033 crores from 1,169 crores. The GRM is 6.93 against 7.86. Now, important thing is that during this second quarter, the IEA benchmark margins have fallen by almost $3.76 per barrel. Now, despite that $3.6 a barrel, our reduction is hardly less than a barrel, which now clearly reflects the complexity, which means that we are able to use very high proportion of heavy and ultra heavy crudes, which are cheaper, and still produce a slate which is almost 85% consists of light and middle distillate. So overall, very satisfying first half and the second quarter.
Mr. Gupta, your GRMs have come down this quarter, like you just mentioned, and so has been the case with your peers as well. Do you see a gradual improvement in your GRMs come next quarter onwards, or do you think another 2 to 3 quarters is where we'll witness pressure itself?
Yeah, what we always maintain is that our superiority to the benchmark. Now, benchmark, as I just mentioned, has come down almost by $3.76 a barrel as compared to the corresponding quarter. In fact, our superiority to IEA benchmark margin in this quarter is $8.23 a barrel. Now, responding to your question, the margins have been really hit. The benchmark margins, all IEA, Singapore, Europe, everything was down in this quarter. Going forward, we expect that the refinery maintenance season will now start. The winter is coming. So going forward, it appears that it should gradually improve.
Mr. Gupta, Essar Oil is a net exporter. Now, exporters make more money when rupee is down. Now, for the quarter gone by, you have a forex loss.
No, we have been actually always clarifying that as far as we are concerned, the foreign exchange loss, in fact, is a foreign exchange variation figure, and most of it reflects M to M. We have always clarified that we 100% hedge our foreign exchange positions. What actually happens is that when we hedge our positions, we leave the natural hedge portion, which is that to the extent of inventories and export receivables, whatever is the exposure, which we do not cover because there is a natural hedge. But what happens is that if the rupee depreciates, in the books, you have to actually show this as a foreign exchange loss, because that is then subsequently realized in the next quarters. So this is typically not a loss for us. We had clarified this in the last quarter in extensive details. And another thing is the accounting. As you know that we account the purchases as on the bill of lading date, but actually when we pay, the differential is accounted as foreign exchange loss, which actually is then reflected in your revenue. So virtually, as far as we are concerned, we are a 100% dollar business, and therefore there is no foreign exchange loss. This is only an accounting statement.
Did you have any inventory gain this quarter?
No, basically here again we had all our inventory exposures 100%. So like in the last quarter when the crude oil prices have fallen by $6 to $7, we had no loss virtually. And in this quarter when the crude oil prices have gone up, we have no gains. So what we follow very consistently is we hedge our inventories to the extent of 100%.
Okay. You've indicated in the past that you want to raise, Mr. Gupta, dollar-denominated loans. What's the status on fundraising so far?
Now, on the dollar denominated loan, our intention is to convert almost $3 billion of foreign exchange loans into rupee loan into foreign exchange loans. By the end of this quarter, we have covered almost $850 million. We are in discussion with various international and domestic banks, and we are looking forward for converting this exposure into dollar denominated loan as fast as possible. Maybe next 1 or 2 quarters you will see some results.
Mr. Gupta, bulk of the capex for Essar Oil is over. Are you now in a position to reduce your debt? Are your cash flows improving? If yes, what could be your debt position on a gross basis by end of FY14?
You're absolutely right. Our capex is virtually over now, big capex program, except some minor schemes which keep on going every time. So going forward, whatever we generate is to be utilized for correcting our debt. We have almost 18,500 crores approximately debt, besides 3,000 crores of sales tax liability. And going forward, our intention is to convert this into the dollar denominated loan, wherein our interest cost will be reduced substantially, and we are looking for longer maturity for these loans, which means that the repayments will not be very significant in the next 1 or 2 years, but the interest cost will come down, profits will increase, cash surpluses will increase. So going forward, the correction in debt equity ratio will be very steep.